Hi, and welcome to the balance of payments. The balance of payments is made up of three accounts: the current account, the capital account, and the official reserves account. The current account shows three different things. It shows net exports, net foreign income, and net transfers. Net exports is exports minus imports. When America exports goods and services, money flows in. When money flows into a country, we call that a credit. When we import goods and services, then we have to give away our cash. That's a debit. A debit is an outflow of currency. Net foreign income. Net foreign income is, for instance, if I get a job working overseas and send money back to America, then that represents a credit to the current account. However, if someone comes to America, like a migrant farm worker sends money back to Mexico, then that is money leaving our country, and so that's a debit in net foreign income, therefore it's a debit to the current account. We also have net transfers. For instance, when tsunami relief occurred after the big tsunami that hit the Pacific and the Indian Ocean, that money leaving America would be considered a debit to the current account, as that was money flowing away from the United States to foreign countries. So those are the three parts of the current account: net exports, net foreign income, and net transfers. And what we know is that, especially with regards to net exports, is that the current account in the United States is negative. Now, one rule about the balance of payments that you probably read about was that the balance of payments must equal zero. So if this is negative, then what must be true about the capital account? And that is that the capital account probably is positive. The capital account is net foreign investment. Well, net foreign investment is, you take two numbers. You take the money flowing into the United States to buy U.S. assets. An example would be the Toyota factory in San Antonio. That is a credit to the capital account. So money coming in from Japan being pumped into America to build a factory in America. That's a credit to the capital account, the Toyota factory. An example of a debit to the capital account would be if one of you decided to go purchase stock in a French company. If you purchase stock in a French company, that would be a debit to the capital account, in that money is leaving America and flowing to the foreign country. The capital account represents both net foreign investment and also represents net foreign savings, and so the capital account has an effect on the loanable funds market. So that if there is a credit to the capital account, we see that as an increase in the supply of loanable funds. And if there is a debit to the capital account, then that is a decrease in the supply of loanable funds. Now, theoretically, the current account and the capital account, they should equal zero. But what we know is that in any given year, that may not be true. So the current account and the capital account, when there is either a surplus, that is, more money is flowing in than out, or when there's a deficit, more money is flowing out than flowing in, then the way we balance that is through the central bank does what are called official reserves, and that's net foreign currency. In any given year, let's say that the United States has a balance of payment surplus. In that case, then we collected more foreign currency than we paid out. Well, that would be then added to the official reserves at the Fed. Then in another year, let's say we have a current account, or a balance of payments deficit. If we had a balance of payments deficit, then the money that had been in reserve in the Fed would be depleted from the Fed's official reserves and be used to zero out the balance of payments. Some countries, like the United States, our official reserves are done passively. In other words, it's just used to zero out the balance of payments, but it's not used to manipulate the exchange rate. In China, however, they actively manipulate their official reserves in order to peg the Chinese yuan to the American dollar. And so there's two ways to use official reserves. The balance of payments is pretty straightforward. You can take a look at it. You can see already that some of this stuff we've already covered, but you've got your current account, your capital account, your official reserves, credits, that's money flowing in, debits, that's money flowing out, and that pretty much covers the balance of payments. So there you go. That's it. Bye-bye.